And welcome back to the Prescribing Prosperity podcast with your hosts, John and Alex Soutsos. Guys, it was a spirited discussion last time around.
That's one adjective.
Yeah, there we go. Don't you think? I think it was good.
Dry economic humor.
Well,
I think
spirited sounds a lot better, Alex.
Yeah. Dry makes it sound like we were putting people to sleep. I don't think we put anybody to sleep in that last episode.
I don't think. Now, this episode, maybe.
Maybe. I don't know. We'll see. We can start yelling and screaming early.
Well, money. And if I get another episode, if I get another email in my inbox about something called the BRIC, B-R-I-C, I'm going to lose my mind. And that really is essentially what the subject of today's podcast is about. What is the world's default currency? And is it in any danger of being displaced by other nations that would prefer to do exactly just that? Who wants to pick up on that topic?
Well, I can start us off here because I think the best way to get to that point is we need to first back up a little bit to understand how we arrived at the United States becoming the world's reserve currency, or the U.S. dollar, I should say.
Yeah,
becoming the world's reserve currency. So in order for us to get that, we got to rewind. You got to jump in the get your old VCR out. You got to hit the rewind button, and then you got to wait 20 minutes because Blockbuster is going to charge you a fee if you don't rewind it.
Exactly.
And then once we get to the beginning, we're going to start with the backing of currency. So originally, for people who don't know, currency actually started as physical coins. Actual precious metals that were used as mediums of exchange. Because before we had any sort of medium of exchange, the only way for trade to occur was bartering. So you would trade one good for another, but if there wasn't, if you didn't have a good that was of value to the party that you were buying from, then it was impossible for you to do business. Because if Bill, you had socks and I have bottles of wine, and you're living in Utah and you don't drink bottles of wine, then I'm not much good to you, and so I can't get my socks from you, and so I'm going to have cold feet.
And we don't want that because you're in Canada and it gets cold up there.
That's true. I'm sitting down here in the lower level of my house. It's June 27th, and I've got a blanket on my legs. So,
so you need socks.
I need.
So
socks.
how are you going to get those socks? You're going to have to pay me for them.
Listen, Bill. An effectively built igloo is very warm on the interior. So watch what you say about us Canadians.
Listen, we have enough stereotypes. Let's not steer into the skid here.
So you're going to have to, but to your point, Alex, you're going to have to pay me for them because I'm like, I don't drink wine. I don't want your wine.
Exactly. So we're going to have to come up with some sort of medium of exchange. And that's where the original form of currency was created, is a medium of exchange to say, okay, for two parties who do not have mutually agreed upon goods, let's create a mutually agreed upon medium, for us to utilize. So that way, if I give you this piece of value, you can then take this piece of value and exchange it for something that you want.
Right.
And that is the purpose of having a currency. And so originally, currency started off as physical pieces of precious metal. But as we have seen over time, the valuation of precious metal fluctuates, but also, and the supply of it fluctuates. But also what you had over time was chiseling. So it was hard to standardize because you would have these different pieces of physical currency that existed. But over time, what people would do is they would shave it off and shave it off and shave it off in order to try and save a little bit of money. That's where the term chiseler came from.
Yep.
And so we needed to evolve away from the use of physical precious metals as a way of creating a medium of exchange. And actually, the first paper currency was issued during the Tang Dynasty in China, and between 618 and 907 AD.
And who says dynasties are no good?
Exactly. I love a good dynasty. There's one in Florida right now, but we'll discuss that another time. Sorry, Edmonton.
I think Alexander's referring to hockey.
Yes. I'm just trying to rub some salt in the wound to everybody else. I got enough salt in my wounds. I can share some with everybody else. But anyway, The first government-backed paper currency was in the Song dynasty, which is the 960 to 1279 AD era. So that
can you repeat that? The Thong dynasty?
Song. Like song, John. We're going to sing a song together.
There's no Thong dynasty. It was full bum undies at that time.
I think there's a Thong dynasty in Miami.
No, that's Brazil. Brazil might have the Thong dynasty.
Okay, all right.
It was bloomers still in China at that time. So anyway, we can leave the underwear talk to the side and just focus on the currency. But
okay.
So anyway, so that is the origin of currency. Dad, do you want to talk about the backing of currency as we moved away from the physical currency? I've already illustrated that the first paper currency and government-backed currency existed in China, but explain to the audience what it means to have a currency that is backed by something.
Well, clearly, because all the other forms of currency have the negative drawbacks of physical altering to make them less valuable. You having something solid that everyone can agree upon, like silver or gold, can provide confidence in the value of the currency itself. And so gold became that standard through the time of the British Empire, and then eventually into the transition into the American Empire's hegemony, both politically and apricot, whatever.
Sound like an ape if you say apricot.
Hey, listen, if you're British, that's the way you pronounce it.
Hey, it's not my fault they don't know how to pronounce their own language.
Yeah, leave the British alone. They have a lot of their own issues to deal with. Okay, so that's the importance of having a solid foundation such as gold or silver, is because then people cannot fool around with the value of the medium of exchange. But there's also problems with having physical commodities as the backing of currencies, and that is how do you settle transfers of assets from one country to another? Then you have to stick it on ships in the old days and take it across oceans to another country. So that becomes problematic. So theoretically, it's great because you have the physical commodity to back it up, but then you have the problem of settlement processes, and that's and not to mention that you have a constraint on the government in terms of its capacity to spend when there's only a finite supply of the commodity in the world with which to support the currency. And obviously, whenever countries get themselves entangled in military conflicts, which are extraordinarily expensive, there's immense pressure to either borrow or perhaps abandon the solid commodity in exchange for going back to the paper and just printing more of it.
So when did our currencies clearly are no longer backed by physical commodities, right, John?
This upcoming segment is going to scare the life out of most people, because I don't think, maybe people intuitively understand it, but I don't think psychologically they've really internalized it. Our currency today, we know it has no material value. Obviously, here in Canada, our bills are now printed on plastic, never mind paper, and that doesn't fold easily into any wallet of any kind. So I don't know what they were thinking there, but anyway,
it's more durable. That's why.
Yeah, the fact that we all talk about, we have money. What exactly do we have? We have these pieces of paper that we all agree will exchange for goods and services, but has no intrinsic value whatsoever. And gold is not supporting our currency, whether it's American or Canadian or French or whatever, or the euro. Really, it's a belief in a system. And if we look at human history, despite what military conflicts are occurring in the last 50 years, let's say, and we think, there's been a lot of military conflicts. Well, this is actually a period of relative peace and tranquility in the grand history of human civilization. So it's this relative peace and prosperity that we've had since the early part of the 20th century up until the present that has allowed us to create this system where we actually don't have the physical backing of currency, and that allows us to agree to accept paper or now digits on a computer as to a medium of exchange or value. But being professional portfolio managers, people say, well, what happens if there's a nuclear war? What's going to happen? I want to be able to get my money out of the stock market. Well, good luck. If there's a nuclear war, there is no money. There's no stock market. There's no banks. There's physically no money.
Even having physical gold bars at that point is of little value to you. What's anybody, if there's a nuclear war, what is anybody going to do with your gold bars? You walk up to them and hand them a gold bar, they're going to say, that's great. What the hell am I going to do with this?
Yeah, at that point, you better know how to hunt and how to survive.
Exactly.
Because there is no protection from a nuclear war. So having money in a bank account in a short-term deposit is not going to save you from a nuclear holocaust.
Well, wait, before we wander off into the apocalypse and the Holocaust here, okay, let's just back it up for 1 second. Because John or Dan, either one of you, when did we decide? No, we don't need the actual physical commodity.
So I'm glad you asked that, Bill, because I was going to actually say before we start diving off the deep end, we need to get a timeline in place here. So I've already outlined that the original creation of paper currency started in the 7th century.
Mm-hmm.
Now the gold standard in the modern sense, first implemented in England in 1819. So they basically pegged their currency to the amount of gold reserves that they had in their coffers.
Okay.
Was done in 1819. The United States followed suit about 60 years later in 1879, following the rapid depreciation of the U.S. dollar following the Civil War. And actually, that's as we outlined in the previous episode, the depreciation of the currency, otherwise known as inflation, is usually following a major global conflict or a major war, because war is very expensive, and so governments have to print money in order to finance the manufacturing of armaments and weaponry and in modern terms, equipment, planes, bombs, etc. And so what ends up happening generally following a major conflict like that is a devaluation of the currency. And so following the U.S. Civil War in 1879, they've added themselves to the group of countries that were following the gold standard.
Okay.
And so that was the establishment of the gold standard. And then in terms of countries eventually moving off of the gold standard, once again, it was following global conflict. So Britain did it in 1931. It was following World War I. It was about 13 years following World War I at that point. And so, they were also dealing with paying off all of the national debt that they had accrued and financing and rebuilding following the war. And so they moved off the gold standard in 1931, and the United States began the process in 1933. They moved off of the previous version of the gold standard that they had been on, but did not completely abandon the gold standard until 1973. And so what happened was the Gold Reserve Act of 1934 forced Americans to convert their gold coins, bullion, and certificates into United States dollars, which effectively transferred the title of all of the gold that was held privately by individuals over to the U.S. Treasury, so that the U.S. Treasury had a reserve of gold that they could use as the backing for their currency.
In all seriousness, and I'm sorry for interrupting that excellent explanation, the arbitrary confiscation of private assets like gold by government order, as occurred at that time, should raise some questions into people's minds today about the desire to have physical gold bullion, because once again, and as we saw during COVID, the government can make rules and take away your gold. So this is all very tenuous when it comes to trying to protect your wealth today, even if you do have coins in a safety deposit box.
So what you're saying really briefly is that history shows that if the government wants your gold, the government's going to get your gold.
Yeah.
And I think what is important to also illustrate is, and something for people to keep in mind, and I'm not trying to take this in a political bent, but if government is handed too much power, we have seen in the past examples during which they have used that power to basically nationalize a number of different items. So nationalize as in take private property away from individuals and bring it under the government's control. And the Gold Act of 1934 was one example of that. But we've seen that across multiple countries across the world where the government has nationalized certain resources or elements of the private sector, and that can be very dangerous, and it can leave a lot of people in a very impoverished state of living. But anyway, I don't want to take us too far off track.
Well, let's take us then to 1973 and Richard Nixon and Tricky Dicky.
Well, hold on, you're jumping ahead. Okay. That's 1973. We need to talk about Bretton Woods first.
All right.
So Bretton Woods.
It's a beautiful resort, by the way, in New Hampshire.
Yeah, I've never been, but I've heard it's nice.
I've seen pictures.
So anybody in the New Hampshire area this summer, go visit Bretton Woods. So 1944. So we're heading towards the tail end of World War II, and they're basically at this point it's fairly obvious what direction the outcome of the war is going in. The tide has turned significantly in favor of the Allies, and they are starting to plan for what a post World War II world we're going to be living in. And what happened in that conference in 1944 is they established the U.S. dollar as the dominant reserve currency, and they pegged the U.S. dollar at a fixed price to gold at $35 per ounce. And then from there forward, all currencies were valued relative to the U.S. dollar. So that was the first official demarcation of the U.S. dollar as the official world reserve currency. Now, for people who don't know this is not the first time in history that a single currency or multiple currencies have been accepted as reserve currencies. So over the course of history, there have been, I'm just doing a quick count, I think about 8 reserve currencies since 1250. So starting with the Florentine florin in the 1200s, then you had the Venetian ducat, the Portuguese real, the Spanish real, the Dutch guilder, the French livre, and then eventually the one that most people are probably familiar with prior to the US dollar was the pound sterling, which was the late 1700s and into the early 20th century, before the US dollar replaced it as the official world reserve currency. And that was where things basically were left off following World War II. Was the US dollar, because the United States economy had been held intact. They were actually kept off-site. The only major attack that occurred during World War II, as everybody knows, was Pearl Harbor. Otherwise, the continental United States was unaffected from a physical standpoint by the war, whereas Europe and the rest of the world were left in ruins as a result of the outcome of the war. Not to mention, greatly indebted as a function of financing that war, and so it made sense that the United States economy and therefore the United States dollar was going to be the official backing of the world's economic system going forward. In addition to the fact that the United States had actually amassed at that point about 75% of the world's gold reserves, but we'll put a pin in that and we'll discuss that afterwards. So, Dad, I think now you can pick it back up here and talk about what happened in 1971 with Mr. Richard Nixon, or as you kindly referred to him, Tricky Dicky.
Well, before we get to Tricky Dicky, just going back to World War II for a quick second, the German U-boats did get close to the eastern seaboard of the United States and off the coast of the Maritimes in Canada.
Yes,
but
they
did
didn't
not
actually.
They did not land.
Yeah. But anyway. That's the major demarcation there.
I know. Yeah. I just want to be difficult. And so in the 1960s, we had multiple wars. The one that's most obvious is the Vietnam War. But what people don't realize that even non-physical wars, like a military conflict, can drain the government's coffers. And so you had other wars occurring, specifically the war, Lyndon Johnson's War on Poverty. And later on, War on Drugs. And I think it was Nixon who started the war on drugs.
Nixon was War on Drugs.
Yeah, so War on Poverty by Lyndon Johnson, War on Drugs by Richard Nixon, War in Vietnam that was a Kennedy Johnson war.
That was an Eisenhower Kennedy Johnson war. Yes.
that Nixon wanted to wrap up and end. So he did do a few good things. And effectively, the U.S. could not borrow enough money to pay, or they did borrow a lot of money to try and pay for these things, but they were constrained in terms of money supply by the gold standard, and so he decoupled the U.S. dollar from gold in 1973, and that allowed inflation to run amok in the 1970s. And it was a little peanut farmer from Georgia ended up being the fall guy for that one, although he did not help in any material way.
No, and it did give us that winning political phrase, John. Whip inflation now.
Yes.
God, he was boring. What a
okay.
I'm not going to disparage.
We're going to edit that
Deacon
one out.
was his code name.
He was a well-meaning old gentleman.
Anyway, continue. So you can continue with Nixon and the termination of the gold standard, the official termination.
That was the end of the gold standard, and it ushered in an era of inflation. So since that time, gold is held on reserve in the U.S. in Fort Knox and several places around the country, principally in New York. And it's no longer used to back the currency, but the U.S. still has the world's largest supply of gold.
Yes, but just to put a fine point on it, the reason why Nixon, or part of the reason why Nixon, aside from helping to manage inflation, or part of the reason was Britain requested to be paid in gold rather than in U.S. dollars, because the United States was inflating their dollars so heavily as a result of financing all those various wars and social endeavors. And so as a result of Britain requesting to be paid in gold rather than U.S. dollars, that is what officially forced the hand of Nixon to say, we can no longer enforce the gold standard. We need to move off the gold standard. And the opposite of a currency backed by physical commodity is what's called a fiat currency. Fiat, from the Latin term arbitrary, or arbitrary act or decree.
By order of government.
Yes.
That's how it was explained in economics class, by order of government.
The literal definition is by arbitrary act or decree.
Yeah.
So, yeah, essentially the same thing, though. So,
yes. And we're not talking about a little tin can a car from Italy.
Yes. We're talking about the value is derived by government order, and it is valuable because the government says it is valuable. The government says this green piece of plastic in my pocket is worth $20.
Green.
All yours is green, Bill. Ours is different. It's like Monopoly money.
Ours is multicolored.
Yeah,
I know. I have a few here, so
we're virtuous.
Yes. So the green ones are $20, the purple ones are $10, and the blue ones are $5, and the red ones are $50, and the brown ones nobody ever sees, so we don't even care what they're worth. But that is the way our currency works. It is worth what it is worth because the government says that's what it's worth. But
but also, John and Alex, I'm sorry, I don't mean to interrupt you. It's also worth what a market says it's worth too,
yes.
Which is an even more abstract concept. I mean,
$20 today is not $20 20 years ago.
No.
So the number may be the same. You can say it's $20,
right?
But what does $20 buy you?
In 1973, it bought me a loaf of Wonder Bread, and today that same loaf I think is $4 or $5. Although I would never buy Wonder Bread, but
well, in 2005, it bought me Subway tokens and left me $4 for the rest of the week in spending money, which was 4 days worth of dollar pizza at Union Station on the way home from school. But today, I don't think I could even get the slice of pizza for $20. But anyway.
No. So that's the lesson of inflation. Now, in terms of whether the U.S. dollar will continue as the world's reserve currency, there's been speculation about that forever. I can tell you, going back to the late 80s, early 90s, especially after the savings and loan fiasco and post the 87 market crash, discussions continuously came up about whether the U.S. dollar will remain as the world's reserve currency. And every time there's a fluctuation in the U.S. dollar, that speculation runs rampant again. So that is a conversation that's once again occurring. And there are reasons why it is highly unlikely that the U.S. dollar's status as world reserve currency will be abandoned anytime soon. World history dictates that at some point it will, but highly unlikely in our lifetime.
Well, and one thing to keep in mind is on the grand scheme of things, if you look at it in the scheme of the world's reserve currencies over history since 2050, the United States regime as the world's reserve currency is actually fairly short. It is second only to the French livre in terms of its duration thus far as the world's reserve currency. All of the other currencies. Oh, and sorry, the Portuguese real actually had a shorter stint. But otherwise, all of the other major currencies that I talked about before, the Florentine florin, the Venetian ducal, the Spanish real, the British pound, like those all had longer reigns of as the world's reserve currency than the U.S. dollar currently has had. So for people to say, "Oh, it's overdue for it to change to something else," it's not. I think what ends up happening, and this is not limited to just this topic, it is common across a variety of different topics, and frankly, it's just a function of human nature. Is people get bored of an old narrative, and they're always looking for a new one. They're looking for something different.
Well,
and different for the sake of different is not necessarily why or how things occur.
Yeah. Now, the obvious reason why there is no other currency that's going to replace the U.S. dollar, I think most people can exercise some common sense. And they talk about the BRICs, Brazil, Russia, India, and China, all dubious nations of various economic ability. But tell me how Western Europe and North America and Asia, including Japan and South Korea, is going to have the confidence that the rule of law will be enforced in any of those nations. And I think there's a heavy dose of skepticism that those nations could act as in concert to provide a currency that is trusted on a global scale based on the rule of law. And one thing you can, every country has flaws, and the U.S. has flaws. But one thing you can say about the United States is laws are enforced, especially around business and intellectual property. And so that's a big reason why the U.S. dollar continues to maintain its status as the world's reserve currency. It's also the largest economy in the world, and therefore the most liquid economy in the world. And liquidity is a very important term that people should remember beyond this podcast. Liquidity in any market is critical to the operation of the market in an efficient manner. And the ability to exchange one asset for another asset is essential for an economy to function. And so having the world's largest economy and also the largest capital markets goes hand in hand with why the U.S. dollar will maintain its status as the world's reserve currency.
And the largest, most sophisticated banking system in the world is another important component of that.
People talk about the euro being the potentially becoming the world's reserve currency. The European economy is, I think, roughly half the size of the U.S. economy, even though it has a larger population. And good luck with enforcement of intellectual property in some parts of Europe, and the slow pace of the court system in Europe, and the bureaucracy involved with everything. I mean, bureaucracy is bad in every country, but it's absolutely sclerotic in Europe. So liquidity in the markets is another reason. A third reason is military might. So having the U.S. military, and we saw an illustration of just how mighty it is over the last weekend, demonstrating the capacity for defending its interests and its system. The U.S. has no equal around the world, and there are some people that might say, well, Russia is the U.S.'s equal. I would differ on that. Russia has nuclear warheads, which gives it a lot of power, but it does not have the breadth of the military the U.S. has, and neither does China. So
the Russia is not even 10% of the total military expenditure that the United States is.
The other thing people need to remember is the Russian economy is the size of Texas.
Yeah.
So that's one state,
and
largely
one of the
larger states. Yeah, it's basically, there's a joke in the investment business that Russia is a gas station posing as a country. And you could say that about Texas too, for that matter.
I grew up in Texas. This was,
you didn't know
really
that, Bill.
careful. Tread really careful here, John. Okay.
The stars are bright.
Hey, listen, we love your big ribs in Texas.
I love everything about Texas. I want to go live in Texas.
Texas is a wonderful place. Unfortunately, a lot of unwelcome people are moving there. So.
The river walk in San Antonio is beautiful.
Isn't it? It is gorgeous.
Yes,
it really is.
And the Alamo is there. So how can you argue against Texas? Anyway.
And by the way, just on a financial note, there's also an enormously large alternative stock exchange being funded by investment banks being built in Dallas. So
there we go. More good information.
Yeah.
Economic power is another reason why the U.S., and I think I basically touched on that. The U.S. is going to continue to be the largest economy in the world, because that's capital comes to the U.S. to innovate. It doesn't go to Europe for innovation. Doesn't come to Canada for innovation. It used to, but it doesn't come to Canada for innovation. Although many parts of Asia are innovative and they refine technology to a great extent, most innovation, not exclusively, but most innovation still occurs in the United States. So for those principal reasons, and there are other reasons, but those principal foundational reasons is why the U.S. will continue to be the dominant or to be the world's reserve currency for an indefinite period.
Yeah, and sorry, I just want to tie it back to what we covered in the previous episode, Bill, which is and I mentioned it a moment ago, the banking system and the confidence in the financial system in the United States. That is another, major component in terms of why it will continue to be the world's reserve currency, because there is a confidence that the U.S. dollar will be protected and appropriately managed by the backstop that is the Federal Reserve and the important function that they occupy. Now, we talked about the fact that some of their function has not been appropriate, or has not necessarily met their desired objective. But in terms of providing a financial backstop to the financial system in the United States, which is where a lot of that money ends up getting parked and where a lot of the value of the U.S. dollar is derived from, the central bank plays an integral role and is part of the reason why the United States will continue to be the world's reserve currency for the foreseeable future. And that's part of the reason why at the time the British pound was the world's reserve currency, because they had at the time the largest and most robust financial and banking system in the world. They also had the largest military at the time, and basically, as they used to say, the sun never set on the British Empire. And so their military might, combined with the sophistication of their financial system, allowed them to support and protect their currency. And that's what the United States enjoys to this day.
Just, I know this is a little off topic, but apparently there's been a signed agreement between the U.S. and China announced just now on trade deal, and the S&P 500 index has hit a new all-time high in response. So I thought that would be
the markets love good news. The markets love good news. I can't tie this.
Today is June 27th for posterity.
For posterity's sake, but I think there's a big, giant, massive elephant in the room that we can't ignore and can't end this episode without mentioning. So I need to ask you, John and Alex, what's your perspective on digital currency? Because there are people who would argue that if there's going to be a reserve currency, it won't be a BRIC, it won't be the dollar, it won't be another country, but it perhaps will be cryptocurrency.
So I'll jump in first here on that, Bill, and Dad, feel free to chime in as well afterwards. But I think the initial optimism for the digital currencies was the idea or the notion that it was going to take some of the control out of the government's hand, because this was basically a ledgered system that created a finite amount of a physical medium, or digital medium of exchange, that was not subject to manipulation by the government by increasing or decreasing the supply. And while that would have been an ideal scenario, and I was optimistic at the time that might potentially come to fruition, I think it was a little bit naive, because of the fact that I don't think we have ever seen any industry that the government has allowed to exist where they have not gotten involved. And so what we're seeing is essentially just going to be a transition from a physical, paper or plastic based currency to a digitized version of the currency. So, it may not be physical US dollars backed by physical gold, or physical US dollars backed by the government. Is going to just be digital US dollars on whatever ledger they choose to utilize. And whether or not that ledger happens to be a finite capacity ledger like Bitcoin is, or whether it turns out to be a different, ledger. And for people who aren't familiar with some of the terminology that I'm using, I recommend that you go back and review the podcast episode that we did with Skylar Sinkowski. If memory serves me correctly, it's episode 6 or 7. But he basically outlines exactly what digital or what cryptocurrency is, and what ledgers are in the context of cryptocurrencies. But the point I'm trying to illustrate here is that the currency, the new currency that is going to become the world's reserve currency, is still going to it's going to be essentially the same mechanisms. It's just going to be stored and tracked and accounted for on a different basis. It's going to be done on a digital ledger as opposed to physical accounting. Does that answer your question, Bill? And Dad, if you have anything further to add,
I think you've encapsulated that information really well.
Bill?
Yeah, no, that does. I mean, for me, the interest in cryptocurrency, and to be fair, I do not have any investment in cryptocurrency, just to be clear. Mm-hmm. But to me, what has always fascinated me about it was the technology, which is the blockchain technology, which is the ledger part of what you're talking about.
Yeah.
Because it for me eliminates the need for trust. Do I need to trust whether John's going to pay me or not? No, I don't have to, because I now have a digital ledger that proves that that's paid and it exists. And it sort of does answer my question in the sense of cryptocurrency is unlikely. I think what you're saying is unlikely to ever be the currency the currency of the world. It's
not going to be a neutral, like a nation neutral medium of exchange. It is simply going to be it's just a digital version of the existing infrastructure. So the way Skylar has talked about it at length, and he and I speak on a daily basis. If you look behind the scenes at a lot of the the different cryptocurrencies that exist, they have all been in the process over the past several years of filing patents and agreements with different institutions, government and otherwise, to digitize essentially all of the assets that exist in the world. Think of anything from physical real estate, cars, to commodities and currency, and the stock market itself is going to be moved onto a digital ledger at some point in the near future.
Yep.
And it is still going to, the mechanisms or the way in which we operate on it will more or less be the same. It'll just be through a digital ledger, on the basis of a digital ledger, rather than physical stores of assets. And so that is going to be the only difference. So we'll still have a, quote unquote US dollar, but it'll be a US dollar that is built on the, Ethereum blockchain, or on the Bitcoin blockchain, or the Solana blockchain, whichever blockchain they choose to partner with. The US government has partnered with several different blockchains for different aspects of their operations, but whichever one they choose to utilize for the dollar is how that will evolve. But it'll still be a currency that is controlled by the government. Unfortunately, it's not going to be a net neutral, party that is going to create or build the blockchain for the world's international currency that is going to have a finite capacity, and trade is going to exist. We have to remember that, the various government organizations and even non-government organizations like the IMF, the UN, and others such, and the World Bank are large enough and have enough decision-making clout that they would not allow for the existence of something in which they did not have the ability to exercise a degree of control over.
Just to complete our discussion on this subject matter, in terms of the US dollar status as world reserve currency, in the last 25 years, the use of the US dollar as for maintaining treasury reserves in various countries, in terms of transactions, there's still 60% roughly, plus
right,
or minus, being transacted and held in exchange reserves in the world. The euro has 21% of, or roughly call it 20% of those reserves, and that's a flat line. You can go back 25 years, and it's essentially unchanged. So other currencies, Great British Pound is 5%, the yen is 6%, and there's the category called other, that's 10%, and that includes Canada, Australia, and the Chinese renminbi, and the Swiss franc. So the Chinese currency is a fraction of the 10%. So nowhere near where and clearly there's no Russian ruble being held as a reserve anywhere. So the US dollar is likely to maintain its status. Now, I want to transition this discussion to the exchange rate and the value of the dollar in the recent past. So this year, primarily due to the trade negotiations initiated by the United States on a global basis, the US dollar has lost significant value, including against the Canadian dollar. I think it's down again, roughly 9 to 10% against a basket of international currencies, and it's down roughly 5% against the Canadian dollar. So for us Canadians here who are investing in American companies, which is the portfolio that I run, this has been a headwind, and it creates some discomfort. But this has happened before historically. So there's been episodes of a devaluation of the US dollar relative to other currencies. A huge one in the first decade of the 21st century because of the lost decade with the following the decline in the big decline in the stock market after the tech crash in the year 2000. And then we had, of course, the banking, the Great Recession in 2008. So throughout the first decade of the 21st century, the US dollar devalued quite significantly against foreign currencies, but then it rebounded when those issues were resolved, and it peaked out in about 2015, and it's bounced around in a way that's overweight relative to those currencies from roughly 2009 to the very recent past. Just in 2025, it's gone below its par value, and so it's currently down roughly, you can argue 20 to 30% below its par value against a basket of currencies. And against the Canadian dollar, it's roughly 8% below its par value. So we can expect, once these trade negotiations are wrapped up, and they should be wrapped up next month, that we're going to see a rebound in the US dollar. Also, from a purely technical perspective and on currency trading, it's at the very bottom of its trading channel. So you're likely going to have a resumption in demand for the US dollar in the next 6 months to 18 months. Whether it occurs suddenly or gradually, I don't know. So that's going to be, for us Canadians, a big tailwind as we round the corner of the track into 2026. And so we don't expect the US dollar's recent weakness to sustain itself.
Great. As an American, I'm happy to know that.
Well, as a Canadian investing in US stocks, I'm happy to know it as well. My clients are very happy to know that too.
Yeah, that's great. Well, I think we've covered pretty much everything we need to do in terms of the reserve currency. Is there any notes or anything you want to leave people with before we wrap this episode up?
That pretty much summarizes it. Was it too dry, Bill? You promised a dry episode here, so what do you think?
It was not dry enough. We need to go back, redo this, and make it a whole lot more drier. We can get some charts up there. We can talk about,
A picture's worth 1,000 words, Bill. You know that.
I know, that's what I mean. We could dry this out fast.
instead of having videos of our images, we instead should have charts as placeholders.
Charts. Yeah. No, thank God we haven't gone there yet. No, that's a good thing. For people who are listening to this podcast, these two guys, they're available for you to have a conversation with. For those of you who are clients, you obviously know that already. But John and Alex, if somebody's listening to this who don't know you and haven't spoken with you, what's the best way for them to get a hold of you?
Best way is for them to send us an email at info@medwealth.ca. That's info@med-wealth.ca.
And do so. The other thing you can do if you want to continue to get these dry, put you to sleep podcasts late at night when you're suffering insomnia is subscribe. Please do subscribe, because then every time a new episode's dropped, you can give it a listen. And I would ask that you tell people about the podcast. If you find it informative, if you find it entertaining, tell people about it. Let them know you like it, because word of mouth promotion is invaluable. Until next time, I'm Bill Tucker. On behalf of John, Alex, and everybody at MedWealth, thank you so much for taking the time to listen today, and we'll catch you on the next episode.
Thank you for listening to Prescribing Prosperity. Visit our website at med-wealth.ca. That's med-wealth.ca for more information or to connect with us for a consultation. Don't forget to click the follow button to be notified when new episodes become available. The information covered and posted represents the views and opinions of the hosts and their guests and does not necessarily represent the views or opinions of IPC Securities Corporation. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investment advice. Always seek the advice of a qualified and licensed financial service provider with any questions you may have regarding your investment or retirement planning. MedWealth Financial Services can provide a private consultation to help you determine the suitability of any guidance discussed on the show.